Trying to predict what the Kelowna real estate market is doing lately is like trying to herd cats. And the market's been going up and down month to month like riding a roller coaster at the P&E. Over the past several months, the market's gone up and down, and really it's been doing so over the last couple of years. To say that prices have been volatile and fairly unpredictable is a bit of an understatement. So in this video, we'll take a look at what my local market of Kelowna did in March and try and make some sense of what's going on and see if there are any patterns or trends that we can pull out of the current data. I'm Tyrell Boake, a realtor in Kelowna, and on this channel, I help you navigate the real estate market and provide you with useful information so you can make informed decisions that make sense for you. If you get any value out of this type of content, please hit the like and subscribe buttons so that other people like you can see this video too. Kelowna real estate's been a roller coaster ride over the last couple of years with peaks and valleys and everything in between, with a number of factors contributing to not only prices but inventory and the number of sales. Is there a pattern to this carnival ride, or has the train completely gone off the track? Let's take a look at what my local market of Kelowna did in March and try and make some sense of it. The first thing that we should take a look at is the number of sales. As you can see in the graph on the left, in 2023, sales in the first quarter of the year gradually grew. If you take a look at 2024, it looks like we're significantly lower than we were back in 2023. This could be a bit concerning because 2023 turned out to be the slowest year for the number of transactions in the Okanagan over the last decade. We're already behind that pace, and March actually came in at 35% fewer sales than we saw just a year ago. As you can see, 2023 got off to a really hot start with sales growing throughout the first quarter and actually the first half of the year, and the Bank of Canada decided to step in again and give us 2 quarter-point rate increases in June and July, which really cooled off the real estate market. 2024 is off to a slower start, but you can see that we're heading in that same direction where sales are growing through the first quarter on a month-to-month basis. If we look at active listings, you can see that the active listings are also growing, and we're significantly higher than we were at the same time last year. The benchmark price of a single-family detached home in Kelowna in March was $986,000, which is down 2.2% from what it was in February of just over $1 million. In February, the benchmark price went up 2%, so we've essentially eliminated that 1 month growth, and we're back down to where we were at January levels. If we take a look at the year-over-year price, last March we were at $999,000, so essentially $1 million for the benchmark price, whereas this year we're at $986,000, which is a 1.3% decline year over year. You could basically say that prices are the same as they were a year ago. If we look at the trend graph of what the benchmark price has done, you can really see this roller coaster ride. You can see that late 2021 and through the spring of 2023, when the real estate market was still really hot, prices were escalating and we were climbing that roller coaster hill, before your heart drops and you fall down the other side. That's where the Bank of Canada decided to start making some rate increases, and you can see that the prices gradually fell until August of 2022. At that point, consumers started to get used to the new interest rate climate, and activity grew and prices started to come up again as well. Prices grew a little bit through the end of 2022, then we saw a seasonal softening around December 2022, and then into 2023 you can see where the prices started to increase again. All the way through June, we saw 2 quarter-point rate increases from the Bank of Canada, prices flatlined, and then they started to come down again. So it's like that roller coaster. We went up, came all the way down, we climbed the next hill. Now we're on the way down again. Prices through most of 2023 saw a bit of a decline in that second half. Then there was some activity early in 2024 where we thought prices might start to appreciate again. That came to an end in March. Prices are down again another 2%. If we look at townhomes, the benchmark price in March was $719,000, which is down a staggering 4.7% from the month before. But if we take a look at the benchmark price of a townhome year over year, there's been no change. The price in March of 2023 was $719,000, which is the same price that we see this year. Again, you can see that there's a complete roller coaster ride in the price of townhomes where they've been unpredictable. There's spikes, there's valleys, there's troughs. But you can see now, heading into this quarter of 2024, there's been a steady drop off of prices again. I still think with townhomes, the price needs to come down a little bit because it's too close to the price of a single family home. And once you factor in what your strata payments are on the townhome versus the mortgage payment on a single family home, your monthly output's about the same. So those townhome prices need to come down a little bit just to give buyers some room between making the decision of buying a single family home or a townhome. There's other markets in British Columbia, like let's just say somewhere in the Fraser Valley, where I've seen the difference in the price of a townhome to a single family home show a gap of 5 to 600,000, which is more healthy for the market. The benchmark price of a condo in March was 496,000, which is a slight decrease from the increase we saw in February where it topped out at 508,000. But year over year, the price of a condo was still up 2.2% from 485 last year to 496 this year. Still, the benchmark price graph for condos has shown that same carnival ride atmosphere that we're seeing in the other two product types, where it was up in 2022, down through the second half of 2022, up again early in 2023, then it kind of bounced around to where it is now. I want to look at the active listings in condos because there are still those short-term rental regulations that are coming out at the beginning of May, which I think are going to still have an effect on the price of condos through this year. As more inventory hits the market, we're into a buyer's market with condos, and there has to be downward pressure on prices as some investors are choosing to get out of the market instead of becoming long-term landlords. If you look at the red line, you can see that the sales pace is significantly lower than the number of active listings in the condo market. This should put some downward pressure on prices. This might not necessarily be something that keeps pressure on the prices long term, but in the short term, there's going to be some opportunities for buyers here. If we look at the average price of a manufactured home, you guys know that I like to use the benchmark price, but when it comes to manufactured homes, they don't actually do a benchmark price, so we have to rely on the average price here. The average price of a manufactured home in March was $265,000, which is up slightly from February 2024. This is one segment of the market though where sales were really slow in January. In February they doubled, and now we're back down to that level we had in January, where there's only been 9 manufactured home sales in the Okanagan over the last month. If we take a look at the average days to sell, in Kelowna it's taking on average 63 days for a single family detached home to sell, 46 days for a townhome, 56 days for a condo, and the aggregate selling price to list price is 97%, which means that of the homes that are selling, they're achieving about 97% of their asking price as the selling price. And lastly, we always look at months of inventory because it tells us kind of what the market's doing. In the single family detached homes, we have 9 months of available inventory, which is still a buyer's market, which you could say is being evidenced now that there's some downward pressure on prices again. When we get into the townhomes, surprisingly, we're in a balancing market with only 6 months of available inventory. So that may balance out the prices. We might not see any growth up or down over the next 30 to 60 days. We'll have to keep an eye on what the inventory is doing. And then if we look at the condos, we've got 8.4 months of inventory, which is clearly a buyer's market. So as I was saying earlier, as that inventory grows, we get more into a buyer's market. There will be downward pressure on prices in the condos, and that's going to provide some opportunities for some first-time buyers looking to get into the market. So it really looks on the surface like the market's acting quite randomly, and if we only take a month-to-month look at what the market's doing, then yes, that's true, it's pretty random. But if we take a broader, bigger 30,000-foot view of the market, you can see some trends. Prices have trended down since the peak of 2022, so you could say there was a small bubble there. And then there was a small bubble last spring before the Bank of Canada brought in those interest rate changes, and prices have been trending downward since then. But like the townhomes, for example, there was no change year over year in what the average price was, and the price difference from last year to this year in single family homes was within 1% as well. It's safe to say that the market right now, over a broader picture, is pretty flat. There's not a lot of growth, but there's not a lot of dropping in the prices either, which is interesting because we've got higher interest rates than we had, say, 5 years ago, sitting around 5%, and it still hasn't forced those prices to come down significantly. I'm curious to see what happens when the Bank of Canada does eventually reduce interest rates. If more buyers hit the market, what's going to happen to prices? If demand increases and supply stays the same that it is, We might move into a balanced market, especially in the single family homes, or we may actually get into a seller's market again, which will put upward pressure on prices. But that's something that we're going to have to watch going forward. It's hard to make a prediction what's going to happen going forward from here because there's still a lot of uncertainty in the market, especially when it comes to interest rates. It's unpredictable when those rates are going to start to come down and if that's going to have an effect on affordability and if more buyers are going to come into the market. It's kind of a domino effect. Once the interest rates come down a little bit, we'll be able to see if more buyers jump into the market, increasing demand, and if that'll put upward pressure on prices, or if it will in fact make things more affordable for a lot of buyers. Let me know in the comments below. Do you think that interest rates are still holding back buyers from buying a home in this market? Is it holding you back? Or let me know if there's something in the data that you noticed that I might have missed. And if you'd like to book a call with me to discuss real estate or talk about your next purchase, hit the first link in the description where you can book a time with me that works best for you. We'll see you next time.